What are relevant cost, class?
Costs that we cannot do without.
Sorry, can you say that again, Hadi?
This call is now being recorded.
Hadi?
I said there are costs that we cannot do without.
There are costs that we cannot do without. Okay. Yes.
Hello? Yeah.
Okay. Alaji, you've been very quiet today. Can you tell us what are relevant costs? Alaji Serikan.
Yes, relevant costs are costs that are used in decision making.
Exactly. Very good. In short, that's what relevant costs are costs that are used in short-term decision making. Okay. So usually these costs are variable in nature because they vary with the activity level. They vary with the quantity or the amount of service we're going to provide. So they are very, very relevant before we take any decision. But they are not only variable costs. They are fixed costs as well. But these are fixed costs that are directly traceable to the product or service. Okay, these are also relevant costs. Okay, so in short, relevant costs are costs that are considered when we are taking short-term decisions. Okay, and they can be in three forms. They are costs that may relate to the future. Okay, so naturally, costs that have been spent previously, if you want to bring them in decision making, you're just wasting your time because they are sunk. So the components of relevant costs are they must relate to the future because decisions are always taken for the future. Simple. Cash flow, there must be costs that will be cash flow in nature. So that means there must not be notional cost. Okay? Relevant costs must be costs that cash will change hands. Okay? So number three, they must arise as a direct result of the decision. Okay? That's what I was referring to. If we want to take a decision, these are costs that are going to be incurred. So those costs must arise because we want to take a decision. Okay, and these are some of the examples. Opportunity cost, opportunity cost, the benefits foregone when you want to take an action. Incremental cost, these are costs that will increase as the activity level increases. Variable costs, we know them. Avoidable costs, costs that cannot be avoided when we have to take decisions, so they are also relevant. So the non-relevant costs are sunk, of course, committed costs, fixed overhead that have been absorbed, just like the fixed overheads we've been calculating when we are doing our absorption costing and when we are doing our ABC. Okay. Another one is our friend depreciation, and not only depreciation, amortization, provisions. Just name them. There are lots and lots of costs that we consider when we're preparing our financial statements that do not physically exchange cash. So this is the more reason why when we are preparing our financial statement, we don't only stop at preparing our income statement and the statement of financial position, but in turn, we prepare our cash flow because our cash is real. Okay, so relevant cost also has to be real. So therefore, costs like depreciation don't exist in actual sense. It's just an assumption. Fixed overhead absorbed, the same thing. Some costs relates to the past, and so on and so forth. Okay? So relevant costs are costs that we undergo when we want to take decisions. Okay? So one example is opportunity cost. Okay, so let's look at it. Opportunity cost. Look at this question. What is opportunity cost? We all know from our little economics. Of course, we all know that this is the benefit that we have to forego by choosing one alternative. So it is a cost to us because we are taking a decision. We have an example before us, example 10, which is regarding a lecturer. A lecturer is being timetable for the coming year. She has expressed a desire to teach in London. The courses she alone can do in a specific week generate the following contribution. Okay, so if she lectures in London, she is going to get £1,200 sterling. If she lectures in Croatia, she's going to get 1,500 as contribution. That's after removing her direct cost, her variable cost. What will remain will be 1,500, and if she teaches in Moscow, it will be 2,100. So we are required to say or to calculate. Well, this time around there is no calculation, but we have to apply opportunity cost knowledge in A, B, and C. So what is the opportunity cost of working in London? Okay? Class, what is the opportunity cost if this lecturer has to lecture in London? Yes? Are you with me? We all know opportunity cost, don't we? Hello, class? Emmy, guy, are you with us? Emmy? Now I'm going to name people. Emmy, are you with us? Ami Jai?
Yeah.
Mari Mane. The Mari,
Yes,
the
Mr.
Mari.
Fofana.
Mari, I think you have to give one of your M's, man. Come on, there are too many. Mari Mane. That is coincidence.
Yes, Mr. Fofana.
Quadruple M.
Yes.
Okay. Yes, Mari. So what's the yeah, right. What's the opportunity cost if she has to lecture in London? Mari, we are waiting. If you don't answer it, we're going to drop one of the M's, yeah? Hi, Mari. Are you with us? Maybe network problem. Let me try someone else. Khadijatu Jalo. Khadijatu, are you with us?
Yes, Mr. Fofana.
Yes, Khadija. Aha. Oh no, there are two Khadijas. There's one. Did you sign on two different appliances? There's one Khadija Jalo, there's one Khadija B Jalo. Or it's a different one. It's different Khadijas. Is it the same? We didn't hear that, Khadija. Can you say that again?
It's Kadito Jalo.
Yes, there's another
Without the
Khadija
initial.
B Jalo that has also signed on. Is it you or is it a different one?
It's a different one.
It's a different one. Okay. Okay. So you, Khadija, please tell us what is the opportunity cost.
My name is only Kadito Jalo.
Okay, fine. Khadija, yes. You don't have much initials. Okay, fine. Yes. So what's the opportunity cost if the lecturer lectures in London?
Mm.
Is the baby trying to answer the question or what? Is the baby trying to answer the question? Is he with us or what? Or he? Okay, Ansumana, can you help us? Ansumana J. Kazama. I think we understand the concept of opportunity cost, don't we? At least most of us have done some economics before coming to this level, is it? Or Bilas, you want to try so that we save time? Bilas, Mr. Bayu, what's the opportunity cost for her working in London?
Yeah, the opportunity cost of like yeah, she have to forgo that of Croatia and Moscow.
What's the opportunity cost?
Hello, Mr. Fofana.
Yes.
Hello.
1,300, 3,600, Mr. Fu.
No. What's opportunity cost? Come on. Is the benefit forgone by choosing one alternative in preference to the next best alternative?
Mhm.
So if she works,
So,
Mr. Fofana. Yes, it will be Moscow.
yeah, yes,
yes, that's the answer. The opportunity cost of working in London is Moscow.
exactly.
Because Moscow is
Yes,
the best.
the opportunity cost for her lecturing in London is the benefits, not only the benefit, all the benefits, but the next best alternative. So if she works in London, if she lectures in London, she's going to earn £1,200, and she's going to forego the income she's going to earn in Croatia, and she's going to forego the income she's going to earn in Moscow. But then Moscow is, of course, higher. So it's the next best alternative. That's opportunity cost, isn't it? So the opportunity cost of working in London is Moscow, is for her teaching in Moscow for going £2,100. Okay? So what about opportunity cost of working in Croatia?
It's also
Yes,
Moscow.
that one also will be
Also in
Moscow
Moscow.
because it's
Oh, who is disturbing us? Please, if you're not allowed to talk, please mute your mic. Yeah. So the opportunity cost of working in Moscow will be what? The opportunity cost of working in Moscow will be what?
that one will be the second one. Croatia.
Croatia, because Croatia is higher. So what she's going to forego will be Croatia and London, but Croatia is higher. So the opportunity cost of working in Moscow will be working in Croatia. Because if she works in Croatia, she's going to, if she works in Moscow, she's going to forego, the best alternative she's going to forego would be 1,500 wikis working in Croatia. Okay? So this is opportunity cost. You write the answers yourself. These are simple things. Okay, so avoidable costs. We know, of course, these are costs that are attached to part or segment of business which could be avoided if part of the segment ceases to exist. Okay, variable costs are normally considered what? Avoidable costs. Fixed costs are not. Fixed costs, you cannot avoid them most of the time. Okay, so like I said, avoidable costs are costs that you can avoid if, like, a particular business segment or a particular product line ceases. Okay, so these are some of the costs that are relevant. Okay, there are more, so you can do some more reading on those. Like incremental cost, we've explained it. Variable cost, we've explained it. Opportunity cost, we did an example on it. Then the non-relevant, of course, we know sunk costs are costs that have been, that are not relevant for decision making. Okay, these are costs that have been spent already, and so on. Costs relating to the past, so they are not relevant for the future. Committed costs, these are costs, of course, that have been, earmarked for particular things. Okay, for example, if you sign, how to call it, if you sign a project with a company, let's say a civil works contract. Civil works meaning, for example, you want to construct a road, or you want to fence a garden, so those are some of the civil works projects. Once you sign an agreement with a civil work engineering company, let's say you're supposed to pay them 2 million. Okay, that 2 million cannot be used for any other thing because you already have a contractual agreement with them. So that 2 million is a committed cost. Okay, so that's what is meant by committed cost. Because we know what depreciation is. We know, of course, as accountants, depreciation is just a notional cost. It is just an allocation of purchase cost of fixed asset to each accounting period that benefits from its use. Okay, so it's just a way of, kind of saving, not real saving actually. It's a way of reducing your profit so that you don't have access to that part of the profit in order to, ensure that the asset is replenished once it reaches its end of its useful life. Okay, so we all know, of course, depreciation. Okay, so any questions before we go to the last topic on this accounting for short-term decision making? Any questions, please? We're going to move to accepting or rejecting orders. That will be our last thing. Last topic we're going to do, and we're going to look at that and do one question, and the other question will be given to you as homework. Okay, the other question will be given to you as homework. Okay, and I want to use that question to be part of your how to call it, your assignment. Then we're going to arrange for a test and an exam. But I'm going to give you this question as your assignment. Okay, and it's going to be done on Google Sheet and shared with me. Okay, I will tell you how to go about that once we reach the end of the class. Is that clear, everybody? Okay. So shall we move? Are we good to go? Are we good to go?
Yes, sir.
Yes. Okay.
Yeah, sure.
Good. So let me stop this as well.